Jesse Livermore. I mean, the name itself is pure Wall Street legend. He's this almost mythical figure who made and lost absolute fortunes. For decades, traders have been trying to find his secret formula. But what if it wasn't a secret at all? What if he actually laid out the entire blueprint for us in a book way back in 1940? Well, today, that's exactly what we're going to do. We're going to decode that formula.
And you know, Livermore does not pull any punches. Just listen to that. For him, the market was never a casino. It was an intellectual battleground. And this one idea, that you win with discipline, not with luck, that is the foundation for his entire system. You got to keep that in mind because it explains literally everything that's about to come next. All right, so here's our roadmap. We'll start with the legend himself, then we'll unlock his so-called secret ledger, we'll decode all its columns, learn his super strict rules for using it, watch it in action with a real stock, and then, at the end, we'll pull out the big principles that, honestly, still apply today.
It is kind of wild to think about, right? Today, with all of our supercomputers and high-frequency algorithms, traders are still obsessed with a book from 1940. But they are. And that's because in How to Trade in Stocks, Livermore swore he had finally cracked the code, a repeatable system to see past all the chaos and find the market's true underlying trend. And sitting right at the heart of his entire method is something that looks, well, deceptively simple. Just a hand-drawn price ledger. At first glance, it looks like just a bunch of numbers scribbled in columns. But this was not just bookkeeping. No. This was his secret weapon for taming the market.
And here you can see that connection perfectly. On the left, you've got the book where he spelled out his whole theory. And on the right, well, that's the tool itself. These are actual pages from his book showing the very ledger he used to make his millions. So here's the core idea you have to grasp. The whole point of this ledger was to ignore the meaningless, little day-to-day jiggles of the market, what he called noise. It was specifically designed to only pay attention to the big, significant price moves that actually define a real trend. You could say it was a mechanical filter for his two worst enemies, hope and fear.
So how did it work? Well, to really get this system, you first have to understand the layout. His ledger was built around 6 key columns, and each one told a very specific part of a stock story.
First up, we've got the most important one for making money, the upward trend column. If a price landed here, it meant the stock was in a strong, confirmed rally. This was the ultimate green light. The system was telling him to either buy or hold on for dear life.
And on the flip side, of course, you have the downward trend column. A price recorded here meant the exact opposite. The stock was in a confirmed, sustained decline. This was the system's flashing red siren, a clear, unemotional signal to sell or just stay far, far away.
But here, this is where Livermore's genius really starts to shine. He knew that stocks don't move in perfectly straight lines, right? So he created these intermediate columns, natural rally and natural reaction. These were for tracking the normal, healthy pullbacks and bounces that you'd expect to see inside a bigger trend.
And then, just to be sure, he added one more layer of detail, the secondary rally and secondary reaction. You can think of these as like a fine-tuning mechanism. It was his way of tracking even smaller movements that could help confirm if that primary trend was still going strong. All 6 columns work together to paint a really complete picture.
Okay, so the columns give us the structure, but the real magic, that came from the rules. He had this strict but simple set of rules for recording the prices, and it was that discipline that turned a simple notebook into an incredibly powerful trading system. The process was actually pretty simple. First, you just record the price in the correct column. Second, and this is the all-important noise filter, you only record it if it moves by a significant amount. For him, that was about 6%, or in his example, 3 points. Anything less than that, just noise. Ignore it. And third, he used different ink colors to make the entries, well, talk to him. And this color code was simple, but so powerful. Black ink basically meant business as usual. The price was just continuing along the established trend. But red ink was like an alarm bell. He only used it for the very first entry in a new trend column, and it visually flagged what he called a pivotal point, a potential major shift in the stock's momentum. Okay, so theory is one thing, but let's see how this system actually performs in the wild. We're going to walk through one of Livermore's own examples from the book, his real-time tracking of U.S. steel back in 1938.
So we start the clock on April 1st. Take a look at the ledger. U.S. steel, sitting at a price of 41, is in the natural rally column. Now, for Livermore, this isn't a buy signal yet, not even close. It's just a little flicker of life after a long decline, something to watch very, very closely.
Now let's jump forward to late June. The price has been steadily climbing, and right there, on June 28th, it hits 53 1/8. Look where he puts it. It's finally graduated to the upward trend column. This is the moment. The system is now flashing a bright green light, officially confirming that a bull move is underway.
Of course, as we all know, no trend lasts forever. By January of the next year, the picture has completely flipped. After peaking, the stock has fallen hard. And you can see it right there on the page. The price, 51.5, is now being recorded in the downward trend column. The system, without any emotion, has caught the reversal.
And this right here is where that color coding becomes so incredibly powerful. Look closely at the entry for September 28th. You see that one at 51 1/8? It's the very first entry in the downward trend column. And look, it's written in red ink. That's the alarm bell. That's Livermore telling himself, hey, this isn't just a dip. This could be the start of a major downtrend. So, after all the columns, and the rules, and the different ink colors, what's the real lesson here? Well, the system itself was just a tool. It was a tool he built to force himself to follow a few core, timeless trading principles that are just as powerful today as they were almost a century ago.
And it all really boils down to this. Number 1, always trade with the dominant trend, never, ever against it. Number 2, wait for the market to prove you right before you bet big. 3, let your profits run, but cut your losses without a second thought. 4, remember that patience and discipline are your greatest weapons. And finally, and maybe most importantly, learn to filter out the daily noise to see the big picture.
And this might be the single most important idea to take away from all of this. Livermore wasn't trying to be a fortune teller. His system was never about predicting what was going to happen next. It was all about reacting to what was happening right now, but with unbreakable discipline. It was a machine for making the right decision in the moment. And that leaves us with a really fascinating question, doesn't it? I mean, we live in this age of complex algorithms and AI that can trade in microseconds. But could it be that the real key to market success still lies in the simple, manual, and patient discipline of a system that was designed almost 100 years ago? It really makes you think.